class on it, but let's talk about accelerated depreciation and the changes in the recent tax law and what that means.
Yeah, so the most recent tax with the One Big Beautiful Bill, what they did, and it's referred to as 179 deduction. It's really about if you're buying certain types of equipment that you can claim the full amount as a tax deduction. And they increased it to $2.5 million.
For 1 year.
For 1 year. So
So we're talking farm equipment,
you're talking farm equipment,
oil and gas exploration, Bitcoin mining.
yeah.
All right, we're in our Bitcoin room.
But then on top of that, they brought back 100% bonus depreciation. Why that's significant is because with a 179 deduction, you cannot create a net operating loss. But with bonus depreciation, you can. So if you do the investment that you're talking about, and the 179 brings you down to zero, we can then do bonus depreciation to take you below zero and create a net operating loss, which eliminates your taxes.
Okay, let's talk about depreciation on real estate. You've been sharing that with our staff and our clients, and
it burns me because so many. If you go into your typical CPA office and say, I've got a rental property, they're going to depreciate that over 27 and a half years, just automatically without thinking about it. But the reality is the tax law allows you to take the value of your house and split it out between components and the outside walls. And those components, we can accelerate those components, which links back to what we were just talking about with, equipment. And so you can, if you've got a rental property, then you can accelerate a portion of it. Or if you've got commercial property, because one of the things that if you've got a business where you have your own building, then we can take that building and instead of depreciating it over 39 years, which is typical we can accelerate that and again, bring you back into a situation where we can significantly reduce your income for that year. And we would also structure things a little different to take advantage of that. If you've got any kind of real estate as a rental real estate or real estate as part of your commercial operations, then we really should talk because it's called a cost segregation study, and we can accelerate your depreciation and get you a lot of money back.
what's the approximate cost of a cost aggregation study?
So probably we're talking, it depends between commercial and non-commercial, but non-commercial regular, we're probably talking about $1,500, or so.
So it used to be around Kansas, people would own $40,000, $80,000 rentals. Okay, some of those rentals now are, several of them that could sell for $300,000, and that makes it, a lot more enticing for sure.
Well, the other important thing there is tax law allows us to change the accounting method. We can change it even if you've had the rental for a few years.
Yeah, when you depreciate like heating and air, HVAC, plumbing, can some of that be done in 1 year, or is it 10 years, or what's the depreciation schedule change to from 27 and a half years on the?
So typically that stuff will get depreciated between 5, 7, or 15 years, depending.
Gotcha. Trying to match the life of it.
Trying to match the life of it, but again, we have a choice between either getting it all in 1 year, or if you'd prefer not to do it, we can do it over the 5 or 7 years, but give you a greater depreciation each year.